All right, let's jump in to today's show. Today we're going to be talking about why we hold what I would consider, or actually, I don't know if I would consider this, but what a lot of people consider losers in a dividend portfolio, or our dividend portfolio.
Yeah.
And you know who you are out there.
Yes.
So there's quite a few advisors and clients, investors, who are like, what's going on here? You know, and the funny thing,
been red all year.
Yeah.
What are you doing?
Why are we doing that? So with this, I think it'd just be a fun topic to discuss, because as a portfolio manager, it just gets hot, you know, where it's sometimes just like you're feeling the pressure. There's two sides to it. There's the emotional side, and then there's the logic side. Sometimes emotion wins out. Sometimes logic wins out. I'm not going to say there's a hold and fast, like, if you do this every time, like, you're going to win 80% of the time.
Yeah,
like, there's been, and we'll talk about some of the examples, but this is just a fun topic. Now, before we jump in, I always want to talk about subscribe to the show. I don't think we hit that enough. Sometimes. If you like it. If you don't like it, stop watching. Yeah.
Still subscribe.
Yeah.
We'll get better.
Yeah. Give us some comments on how we can get better. All right. So before we jump into really what the logic is on why we would do that, let's kind of talk about the emotion aspect, like why we feel the way we do when we see a position in the portfolio that I mean, I hate the word loser, but you know, it's not a good like loser.
No.
You know, looking at you, loser stock position.
But we've been trained and conditioned, unfortunately, by media and TV and all these stock shows that red inherently is bad. And when you see red, it's time to make changes. And you've got to make an adjustment. You can't sit around and wait, because you're just losing money every time it's red. And all you want to see is green. And I think because of that, just you open up your portfolio on your phone. It could be just aimlessly scrolling, wanting to look, see what's happening. And you see that red, and you just initially just panic a little bit. Like, what's happening? What am I missing?
And there are aspects, you know, I would say from a client's perspective and from a portfolio manager perspective, there's two main things to look at. So you have the price, which is hard to ignore.
Oh, yeah, exactly.
However, you have those clients out there listening, is like, that's my income. Like, that's part of my paycheck. So when they cut their dividends, probably the reason why I went down, you know, or they, you know, got rid of it, totally different story. You know, these are two big aspects to consider. So, you know, when a company cuts its dividend, more than likely the stock is going to immediately react. And I would say 99.9999% of the time it's going to be bad.
Yes.
Okay, it's like, you know, cut the dividend, stock goes up 10%. It doesn't happen that way. Typically it will.
I think you gotta be patient.
But there's that big drama to begin with, and then we'll see what happens. But
because usually you're not cutting your dividend because things are going great.
Good. Right. Because you want to take that cash and redeploy it some other place. Investors react pretty negative to things like that. So we understand the emotional aspect of that and why it could affect, but there's more than one position in the portfolio, and the overall portfolio growth, dividend growth, might be up, even though that particular stock cut their dividend in half or by a third or whatever the percentage is, can go down. But even in that same month, you could have had 7 other dividends go up by X%. Now the overall might be down, the overall might be up, but it's not just a simple, oh, this happened, we need to do X.
Yeah, because immediately I'm going to have negative income, or like from what it was last quarter.
Yeah, and the hard part about that is to figure out, it's not a simple math equation. I wish it was a simple math equation, because you have thousands of clients that have bought all these positions at different times. They've all been rebalanced with different shares, and they have different percentages of each position in their portfolio. Like, not everybody's the same. You can have 100 different accounts that own the exact same positions, but nobody invests at the same time.
Right.
We all rebalance similar, but it's different. And there's thresholds. So when you do a rebalance, depending on when you bought, you would have up to 1% to 0.75% on the high side, on the low side. So your percentage of position can be out of whack to a neighbor who bought the next day.
Right.
And you're like, why do I own 4% of this position and you own 2.5%?
So I think I'm hearing all this stuff about time, patience, fear of missing out concepts that are kind of spinning around in my head right now. So time, I think, is like the great equalizer among things. My grandfather always had a mantra of time in the market, not timing of the market, and never panic sell, never panic buy, right? And I think dividends are a great way of kind of bridging that, showing that in the way you explain it. But the cool thing I think that I took away from that was right now, everybody wants things now, right? We're in a give it to me now, give it to me now. And the long game, the time factor that helps with what we're speaking about, I think is something that we got to remind ourselves that time will bridge that gap for us.
Well, and it's the hardest. I was actually going to say that just before when you were talking, when you said it's not all the same for everybody. It's also all not the same when one of them drops. Like, is it going to drop forever? Or is there a chance it's going to jump right back? Could it be a day? And is it something that, and Paul, I feel for you, right? Because I come and ask you these questions that clients ask and you're like, we got to be patient. I do.
When?
And they're like 30 seconds, right? Everything's 30 seconds.
Just real quick, 2 minutes.
But no, the how long should you wait and the timing of that. Sometimes when things drop, that doesn't mean they're always going to keep dropping. But when you're listening to everything, it's like, oh yeah, it's just going to keep dropping. It's so bad. But that actually could be pretty powerful in a dividend portfolio, which I know you're going to go over here soon. But I'll let you go that place. But
we will talk about the logic before we jump into why we would keep a stock or why an investor should consider keeping a stock. Let's talk about some actual stories. Okay. And I have probably more than I want to share here.
Vulnerability.
Yep.
Show
Just means you've been in the investment world a while.
I've been doing this a while.
Don't be
so
too tough on yourself.
let's go back a bunch of years now and let's talk about Kohl's. And this is a position that when the market got turned upside down in 2020 because of the pandemic, a bunch of things happened. The world shut down. We all remember that. We were. It's getting harder to remember, but we still do, right? Mm-hmm. And during that first 2 months or the first quarter of everything changing, and you went from being able to go to a grocery store to like, oh my gosh, like wearing gloves, when you got your groceries delivered and you cleaned everything, right? Yep. And we all have our fun stories of that experience. But when it comes to your money, we had three positions that year that made some strategic decisions with companies that made strategic decisions with their dividend. One of them was Kohl's. And Kohl's suspended their dividend. And they basically said, hey, we're not going to pay our dividend and we're not sure if we're ever going to pay it again or when we're going to reinstate it. And then the market just got destroyed. Historically worst drop, I don't know where it ranks, but it was in the top 10.
No one was shopping.
Yeah.
At least in person.
It was just crazy.
Yep. Can't track close on.
But you had a double whammy for a stock like that, where you had the market just getting crushed. And then you had a clothing store.
Right.
Nobody was worried about clothes, to your point. It was a bad situation, and they suspended their dividend. And then I got questioned like crazy. And, most stocks fell 40 to 50%. This one fell 70. And you're like, what do you do? So what did we do? We just sat in it. Because the vast majority of our portfolio didn't do anything. And I've had a lot of experiences over the years, but this was my first cut, hold, where I'm like, what do I do? I had a rock star, to make it into our portfolio, you got to have some history, right?
Right.
And I'm like, what just happened? What? Nobody saw that coming.
Right.
And as a manager, I'm like, what do we do? And sometimes there's all this logic, and we'll talk about some of it. All this logic of why you put a stock in your portfolio. And then when something like this happens, you have all this logic of why you would do something different. And then you have this one thing that I always bring in that no computer can do. And it's called a sanity check. It's just intuition from a person. You look at all the noise, you look at some of the news, you look at the logic, the levers that you would pull or push as a manager, and you step back and you just take it all in and you're like, how do I feel about this? Understanding money, understanding value, income, all of that. And we're like, there's no, why would we sell?
Mm-hmm.
We're locking in our gain. I can't find a better opportunity. I'm scared to death. Like I'm scared to go outside.
Right. Wouldn't some people say it's an opportunity to invest more?
When they cut a dividend like that, no.
Not when
there's no longer even considered a dividend stock, in my opinion.
Yeah, now it's just
growth. No real way of determining whether or not I would ever regain that type of position.
Being fully transparent here, I was scared I was going to die. Like, and I still had a job to do. So I'm like,
early on,
yeah.
You thought if you got it,
I thought you were done within a month, you know, right? I made the hardest trade I've ever made in my entire life was May of 2020, when everybody was like super focused on just finding food and toilet paper, and all that kind of stuff. And then I'm like, I still have a job to do. My clients are depending on me, and we made some very strategic decisions in the first week of May, which was just in a couple weeks of this. And I remember like shaking, like, oh, am I really going to do this? Because everything just got destroyed and everything went on sale.
Right. Yep.
And I'm like, are we going to survive? But if we do survive, look what we could do, you know? And it was so scary, but it was so rewarding of the decisions that we made. So we just held on. We did nothing with that particular trade, even though we rebounced a few weeks. We held it. We ended up selling it about, 18 months later, made a huge profit. We got into another stock that they ended up restating their dividend. We got some other stock at the future, but we not only recovered all of that loss, but all of our clients, there might be a few that didn't make, I don't know, I didn't look at every single body's account, but the vast majority of our clients made money and we moved on. We had some other ones that I won't take as long to go through, but we had like one of the positions in the portfolio last year that got questioned more often than not was Dow. And I got pressure from clients. I got pressure from advisors. Questions by certain advisors almost weekly. Mm-hmm. Like, what are you doing? Have you read the news? Do you know what you're like? Are you paying attention? Like, how could you justify keeping this in the portfolio? And I'm like, yeah, I hear you. But they got beat up so much that I'm like, is there any other, and this is what I don't want to get ahead of myself, but is there any other viable opportunity that we could exchange? And the answer was actually no. Mm-mm. From a portfolio standpoint, we now hold a rock bottom investment that has one big issue, that if they can solve this one big issue, oh my word, the potential for growth. So most of people are looking at is the emotion, like, I got my income cut, but our overall income went up. But yes, that one went down. I couldn't justify a transition to another stock to lock in that loss when I couldn't find an opportunity that looked just as good.
Yep.
And yes, the value went down. So what do? Nothing. We held it.
Yep.
And here we are in the new year. And as of the recording of this show, that is the number one position of growth in our portfolio by a mile.
Yes.
Crazy.
Crushing it.
Crazy.
It's up a ton. We're not just talking double digits. We're talking like multiple double digits.
33% before we got on.
So. Yeah, just an absolute barn burner. Is it going to continue that way? I have no idea. Yeah. But I can tell you what's happening in our economy and what different countries and our current administration is very favorable to this one position and a lot of other companies in our portfolio, of why we're having such a strong beginning to this year.
Yep.
But the reality is, what was last year's dog is this year's star so far.
Yep.
And there's going to come a point when this manager guy is like, it's time.
Yeah.
We don't need to hold this anymore. We can potentially find a stronger yield. And the companies are strong. It made money, tons of money last year.
Yep.
Didn't lose. It was just, there were certain things that the company decided last year that pressured it. I've had some others real quick. One that we ended up selling last year because we held it for about 2 years, a year and a half, and it did nothing. It was like we bought it at the peak and then we sold it in the gutter, because from the moment we bought it, it was just a loser. And I'm like, it's gonna rebound. It's gonna rebound. And then we found some viable opportunities. I got to my breaking point and I saw reason to get out of it. And for the second time in my career, I made a really bad decision. Because since selling that stock, if you just look over the last 1 year, and we held it this time last year, we sold it in the spring of last year, that stock's up over 100%. So we lost value. Now it's terrible as dividend.
Yep.
It was a flyer that we put in the portfolio because we saw opportunity, but I missed the timing. I wouldn't say I folded to the pressure, but I felt the pressure.
Yeah.
And we got out, and I look back and go, shoot, that one position could have been double its price if we held it in this portfolio as it currently. And now it's a terrible dividend stock. It really is. We held it because we saw opportunity. And we didn't cash in on any of that opportunity. And if I was holding it in the portfolio today, I'd be like, I'm getting out of it. Even though it continues to grow. Oh, there's tons of opportunity of why you would argue to keep it, but it's a terrible dividend stock.
Yeah, I mean, it just hasn't paid in 2 years. So.
Yeah. Lumen was the other one. Won't go into. It's the same story. So, real quick, why do we hold positions in our portfolio? Let's give a little bit of logic here. When we are pressured to sell them, or when it feels like we should sell them.
A lot of times whenever we're looking around, you got to look, is there actually a better opportunity out there? Sometimes they're not. Sometimes the whole sector is getting just crushed. Like say, we're big in like oil and gas, some energy stocks. If that whole sector is just getting pummeled due to whatever's happening on a kind of more of a broader global scale, there may not be a place where you can go and find the income, or not even the income. Maybe the income's never even changed. Just the stock price is really down, and which actually is giving you a much higher yield. And if you're looking around and there's nothing really to trade, sometimes you just got to be patient and just let the whole thing.
And sometimes emotion.
I want it now. Yeah, I want it now, Kyle. Now.
And another one, and I'll always remember this. I remember early in my time coming over, I had a client ask, like, "What do you look for when you make these decisions?" Paul, you know how I take notes? My hand was falling off. All the different things that you look at, and then the intuition that you apply. Sometimes you just see things that make you say, I need to hold this. Mm-hmm. And I will never ask that question anymore because I don't need the 100 answers. But when you look as a person who's looking at it all the time, and you're looking at more than the metrics that you just hear in the news, I don't want to put people down. I'll throw myself under the bus. Like, I know a decent amount, but I don't know enough to make that longer term decision, to make a rash decision without looking at all these metrics. You look at all these metrics. If you see something that makes sense, you stay in, right? You stay in. And sometimes you just got to trust. And as you've said, sometimes twice you've been wrong, but
I'm wrong way more. I'm just talking about those specific 2 things.
But I'm saying twice you've been wrong, but out of all the other times, it made sense. And
I'm wrong way more than 2 times. Let me just get that out there.
I'm
talking about specific positions that have cut their yield 2 times I sold early. Yeah. Is all I'm saying. We could argue, why'd you put them in the portfolio in the beginning?
You want me to remind you of all the things you've done wrong?
Even struck out once or twice.
Yeah, a few times.
Don't worry about it.
So a few other things, like most of the companies that we put in the portfolio, actually, I don't think we've ever put a stock in our portfolio that is losing money. Like their financials are rock star. Even some of the companies that we've mentioned have had awesome financials.
Tons of cash flow, yeah.
Lots of cash flow, lots of cash in the bank, tons of upcoming like contracts that we know of, or cash that's coming in. Like from a financial standpoint, even the bad ones are making lots of cash.
Yep.
So like the metrics tell us it's a buy. Mm-hmm. And our clients are like, get out. Or advisors are like, why are you doing it? Because they're getting pressure from their clients because it's red on their sheet. And as a dividend investor, if we just step way back and we got a price of a stock that's $150 a share, or that same stock at a different time that year is $75 a share. At what point do we want to buy that? When it's $150 or 75?
It's buy it at 75 all day.
All day long. Mm-hmm. And as an investor, if we're in that stock and we bought it at 150, and for whatever news, realities, whatever, it's now at 75, do we want to sell it at 75 or do we want to buy more? Because last year we rebalanced a few times and I got a lot of slack because we bought more shares of Dow. And the logic is like, why are we continuing to buy this? Well, now it's up 33%. Now you look back and you're like, well, the stock still isn't break even to where some of our clients have bought it, yet they're profitable. They have more money in Dow, and there's and I didn't look at our accounts. I bet you we have a huge percentage of our client accounts that have made money in Dow, even though the price is below where they bought it because they have several more shares.
Everyone was able to buy it.
And
I'll put we in there because I'm part of it.
Same with me.
Yeah, me too.
We were able to buy it at such a reduced rate that now, even though it hasn't come all the way 100% back to what last year's number might be,
you might have 25% more shares.
Correct. So we were able to recover that much faster.
Correct.
And when it comes back, it's so cool.
It's so fun.
It's so cool.
Well, and what's like the
such a teaching moment.
Yeah.
I mean, it's such a teaching moment because no matter how many times we're told, I go back to the first comment you said, it's everywhere. But and I don't want it to happen, so don't misunderstand me. But when these things do happen, when you're a person who can only see the value, and then things like what we're talking about happens and that dividend comes back and the value comes back, and you get the chance to show the person who did stay in the patience and trusted us and they see it come back. And that's really how you build your net worth. That is like when people really start to get it.
Patience pays off.
Patience pays off.
This isn't a I told you.
No.
Nothing like that.
That is not what I meant. It's the teaching of showing them in their personal stuff.
I don't want to come across that way.
And I didn't mean to come off that way.
Yeah, this isn't a I knew this. I don't know this.
No.
Right.
No.
I have no idea what's going to happen. But I can tell you more often than not, and you get this from the source of the greatest investor, Warren Buffett. The greatest holding period is forever. And we don't abide by that. But if the more we're patient, the more we're patient, the more money we make. And I'm not advocating buy a set of portfolio and never change it, because I don't think that's good. But at the end of the day, and he's not advocating that either.
But
when you believe in that mentality, because he sells stuff all the time.
Correct. But your mentality is, I'm never going to sell this. So that's how you're evaluating that company.
Well, and don't forget why you got in.
That's it.
You know, it has to make, like I said, that 100 things that you're like, they got to get through. I'm like, okay, Paul, I can't learn all that right now. But if you don't forget why you brought it in and stick with it, unless there's something, and drive the steady ship. Don't go, just because of the news.
You drive a ship like this?
I don't. But at one point when I was young, before I learned this maturity, this
mental note: never go on a boat with Nikki.
Don't go on a boat
as
with
a captain.
Yeah, and if you do, don't sit next to me. I tend to get caught.
She's going to be on the side like this.
Lean back.
Oh, geez.
All right, let's
Jersey swerve.
Oh boy.
For those people who actually watched the whole show, that was worth it, right?
This is the one you want to wait the full 20 minutes. Sorry.
Yeah, exactly.
All right, so let's close this down. If you've enjoyed the show, we haven't talked about this at all here. We have its dividend starter kit. It's not necessarily going to get into any of the, like, we're talking 200, 300, 400 level concepts today. This will get you going. For our clients, do you have any extra questions that you want to throw out there, or any shows that you want us, topics that you want us to go over? We'd love to hear from you. You can email us or just put a comment underneath this show. Hope you enjoyed listening today. This was fun. Thanks, guys.